Hello, good morning, and you're watching Buy Now Sell Now on Now with me, Vinny Motiwala, along with me, Shrishti Sharma. Shrishti, a very good morning to you. You're wearing red, but how is the market doing? I hope it's not too much that we should worry about as well, right?
Absolutely not, Vinny.
But I hope,
good morning.
is that the Navratri colors you're following?
Yes, you're right, because in Mumbai, it's all the cheer about Navratri and the kind of excitement that I'm seeing around. I just couldn't resist wearing the color of the day, that is red. But no color of red onto the markets, because that's what we are seeing, almost a century points gain coming in on the Nifty 50 and Reserve Bank Nifty after HDFC Bank earnings. The stock also saw a rebound, not much excited, but we can see excitement in the Nifty Bank, 280 points cut, and similar is the case with similar 280 points of gains for Bank Nifty, and similar is the case with the broader markets, greenery around. But talking about some of the stock and top gainers in Nifty 50 today, then the life insurance companies are doing very much great today. HDFC Life is the top gainer on Nifty 50 with the gains of 2.2%. Power Grid, Tata Consumers are also seen to be exciting, and even SBI Life holding a gains of around 1.4%. The kind of rebound that we have seen in the crude oil prices, a bit of moderation coming in. Stocks like BPCL as well as HPCL are excited as well. But on the flip side, L&T, UPL and Tata Motors were some of the top losers in Nifty 50 today. But not to forget that no counter in Nifty 50 is actually declining over 1%. So that clearly tells you the breadth of the market. As well as when we talk about some of the tire stocks, after CEAT earnings and a surprise coming in onto the gross margin and EBITDA margin front, CEAT is definitely excited with the gains of 6.5%, and so is Apollo Tyres gaining over 3% in trade right now. So that's how the markets are looking like, Winnie, greenery across. But when it comes to the banking space, then onto the buy now, sell now lens, we're going to be focusing on HDFC Bank, as clearly post the earnings, we are seeing a bit of a rebound for this particular counter.
Absolutely, Shrishti, that's what we're watching on for as well, because that was all eyes on that, first time that we're seeing HDFC Bank properly coming as a merged entity. So all eyes were on that number, commentary coming in on that front as well. And obviously, our managing editor, Nikunj Dalmia, also spoke about HDFC Bank as well. Where does he see it? What is he understanding from this earnings as well? Listen into what he had to say.
See, the elephant is getting ready to dance. They have to get the rhythm right. I don't think it's going to be dancing based on these numbers. I think they just have to identify the right tango number or the right salsa number. I look at HDFC Bank very differently now. The room for negative surprise in HDFC Bank is over. So whatever could go wrong in HDFC Bank in terms of liquidity ratios, financials, the merger, challenges, all that is actually behind us. So the negative surprise from HDFC Bank, both in terms of communication, in terms of numbers, in terms of ratios, I think is unlikely to come. Now, that will restrict the downside for HDFC Bank, because the negative surprise, for example, came when the analyst meet happened. There was nothing great which came out again in the quarterly update. So even though numbers are unlikely to warrant a big upgrade, and which is what I'm going through in the morning when I'm crossing some of the reports, checking some of the reports, no big upgrades. But from a market standpoint, I think it is reaching a level where valuations are attractive, and it is reaching a point where the scope for negative surprise is unlikely. So you pretty much know that if the scope of negative news and number surprise is unlikely, and if the stock has underperformed, then you would like to say that, okay, this is the base at which the stock is just about getting ready. Now, when will the elephant dance? This quarter, next quarter, I don't know. But all I can tell you is that a year from now or 12 months from now, I think we would be using this phrase that HDFC Bank was an elephant which took its time and finally decided to do the tango. It's like it reminds me exactly like SBI.
Yeah.
For years it did nothing, and then 3-4 quarters numbers came in, everyone said, oh my God, how did we miss it? It is cheap. The same thing is going to happen.
Okay. So that's the editor's take coming in on HDFC Bank. That's the editor's take on the banking space, that for HDFC Bank, when will the elephant dance? So maybe 12 months or 15 months now, we can see the elephant dancing or not. Let's try and find an answer to that, and what are experts believing on this one. With this, let me welcome on board Rajesh Agrawal, Head of Research at AUM Capital, as well as Kunal Bothra on the technical front. A very good morning to both of you. And Kunal, let me come to you first, because we have seen a lot lot of brokerages as well as the numbers coming in. But on to the charts, how are you seeing HDFC Bank? Do you believe that in the short term as well, the elephant has the potential to dance? Because 1500 around those levels for HDFC Bank, isn't that lucrative enough?
Well, good morning, Srishti. It's not a break dance, of course, for HDFC Bank, but I would call it as a flat dance because the stock has been absolutely flat over the last few weeks. Even if you look at it from the 2022 or 21-22 performance, the stock is back again at that 50 odd range. Now, I was actually expecting the stock post results to get into a slight momentum mode or at least a mild breakout about that 1550 mark, but it was more like a temporary breakout for HDFC Bank, which means that the stock is or the selling pressure in the stock is still not over, and the stock may consolidate for some more time. So my sense is that the stock may continue to remain to a range. From a long-term investment perspective, of course, HDFC Bank at 1550 range could be a very good buy, but purely from a long-term day, not from a short-term or a momentum stock.
Okay, that's the view coming in from Kunal. But Rajesh, what's your view on HDFC Bank now? Are you expecting a break dance or a flat dance?
Good morning, Srishti. Good morning, Vini. Good morning, Kunal. First of all, happy Navratri to all of you and the entire team of VT Now and our viewers. And just some time back, as Srishti was pointing out that there was Navratri excitement in Mumbai, I would say sometimes come to Calcutta for a Navratri and see how the vibes are. This is the best after the best thing to happen in India. I would say it's a heritage. It has got a heritage tag last year also. Now coming to HDFC Bank, I completely agree with Nikunj that the elephant is ready to dance, but one should remember that elephants don't dance every day. So it takes time for their movement, and it would dance, that's for sure. For 12 to 18 months, it's a very good buy. We have advocated a lot of times that HDFC Bank should be kept in a long-term portfolio. If we look at the numbers, the deposits and advances have shown strong sequential growth. And I am very impacted because of ICRR, but most of the numbers are not comparable. So it's not easy to figure out something, but the asset quality is good. PCR is flat at around 74%. Loan growth was around 5%. And IM's at 3.6%. And the best thing is the valuation. FY25 P at around 15 and 2.5 times adjusted price to book. I think it's a mouth-watering buy. One should not look at it for a everyday movement. One should look at it for investments for maybe 12 to 18 months down the line, and won't be surprised if I see 20-25% upside from the current market price. So that's a buy from our side for a long-term investment.
That's a buy coming in on HDFC Bank onto the fundamental take. Hopefully, the elephant will dance soon. But Rajesh, I'm from Varanasi, and that's actually called the mini Calcutta when it comes to the Durga Puja celebration. But surely we'll try to get to Calcutta as well someday. Looking forward to that. But Vinny, talking about Navratri excitement in Mumbai, are you excited for dancing?
I'm absolutely excited, waiting for the weekend because that'll be the only time we'll be able to go given that earning season is going on. Surely watching out for that, and hopefully next year I would go to Calcutta as well, right then. But on that note, let's just slip into a very short break, viewers. Don't go anywhere because we'll be back and we will be taking all your stock related queries with our experts.
Super app, जो इंडिया का इन्वेस्टिंग बना दे. Super. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Hi. What's that? That's a Manish Malhotra.
Not your dress.
The cupboard. The laminate is a Manish Malhotra design.
Century Laminates by Manish Malhotra. Fashion for your furniture.
Live it up, live it up.
Invest in the share market, earn lakhs with guaranteed returns. This limited period offer is just for you.
Snakes have cameras in their eyes.
How can you believe this nonsense?
Aren't you doing the same thing, Dad? Nobody can promise guaranteed returns in the share market. If you see any such message, mail or ad, you can be sure it's wrong. Such schemes defraud investors and are considered a crime. I've explained this to you so many times.
Such good, so much good. Invest good. Welcome back. You're watching Buy Now, Sell Now on ET Now. I'm Cheryl D'Souza. With me is Shrishti Sharma. And also we have our experts with us today, Kunal Bothra as well as Rajesh Agarwal. Once again, good morning to both of you and good morning on my behalf as well. And remember viewers, this is a show where we get you answers for all of your stock related queries. You can write to us on the WhatsApp number that's flashing on the top of your screen. We will take your queries live. Remember, mention your name each time you mention a stock as well. And also, if you already invested in the stock, mention the buy price, the quantity and the time horizon. That way, our experts will be able to help you better. And let me kickstart with taking the first query then. And this one is coming in from Karan. He's writing to us from Delhi. And Karan wants to know about SBI, Kunal. He's been holding on to this counter for the last 10 years. His buy price is 187 rupees per share. Now he wants to know whether he should exit out of SBI and look to buy SBI cards instead. I must actually congratulate Karan for the fact that he's been very, very patient with his holding in SBI. 10 years ago, he bought at a price of 187, and it's only been over the last 1.5 years or 2 years where we've seen a substantial up move in SBI, isn't it, Karan? Isn't it, Kunal? I'm sorry. So what's your take coming in on SBI? Do you think he should book out profits from this one and instead look to park that money in SBI cards?
So I would partly agree to the second part, but would refrain to book out or advise booking out SBI. I think it's a quality stock. Yes, the stock is going through some bit of grind on the short-term charts, but then we've seen the quality for stocks like SBI and being one of the formidable PSU banking name. I would suggest to stick to it if possible, and if you have the liberty of deploying extra funds, then I believe that buying SBI cards could also be a good strategy, because the stock is also showing signs of some bottoming out formation. A confirmation of a breakout about 200 moving average is what I would wait out for SBI cards, but that could be just a matter of time. So SBI cards also looks attractive, but that doesn't come at the cost of selling out SBI.
Okay, moving on to the next query then, and Rajesh, top on the show is a query coming in on your top recommendations. Krishna from Chennai is looking out for some of your top 2 to 3 picks where he can go ahead and invest for the next 1 year.
Good morning, Sharon.
Good morning.
As far as 2-3 picks for 1 year is concerned, if you're looking for frontline stocks, maybe a HDFC Bank, Larsen or a Reliance would be in our list. And if you're looking at some mid-cap names, so I would suggest go for IRCTC, go for Talbros Auto, and you can have a look at Electro Steel Casting too.
This next one that I have is coming in from Shashidhar. He's writing to us from Hyderabad and he wants to know about Praj Industries. Purchase price is about 430 and he has about 80 stocks, 80 of those in his portfolio. And Lemon Tree, the buy price is 99 and 500 of those stocks in his portfolio. For the next 1 year, Kunal, how are both of these counters looking like? Do you think it makes sense for him to stay put with them?
Makes sense to hold on to both of these names, Praj as well as Lemon Tree. I'm bullish on both of these stocks, and my expectation is that this is the start of a strong, stable as well as a hopefully a consistent longer term uptrend for both of these names. So I would suggest to stay put.
Okay, another query your way, Kunal. This one is from Jayashree, also from Chennai, and she's actually a big fan of yours, firstly, and she wants your advice on EIH. Bought the counters at 336 rupees. Whether to hold this particular counter or move out.
EIH Hotels, I think it's at 231. So my assumption is that you bought at 231 because I think the all-time high levels for the stock is around 260 mark. So I'll look out for again higher targets for EIH Hotels. My sense is again that same rationale with respect to Lemon Tree as well as Indian Hotels, that these stocks are starting off a new trend altogether, something which these stocks have not been accustomed to in the last so many years, because earlier these stocks were broadly consolidating. Now that these stocks have started to trend, as well as the stability of the trends indicate that there should be more upside for these names. So I would suggest a hold on EIH.
Okay, that's EIH Limited, but Kunal, what I can see is EIH Associated Hotels is around 476. Anything on this?
Yeah, so similar view for the stock, but the only catch with EIH Associated Hotels is that it's an extremely low liquid name. I think if I'm not wrong, even the volumes today, for example, is just about some 8,000, 9,000 shares. So you have to be a bit cautious on these kind of stocks, especially in terms of the illiquidity.
All right, this next query that I have is coming in from Mr. Singh. He's writing to us from Pune, and this one is for you, Rajesh. He wants to know about Gillette India. Fundamentally, is it a good counter to hold for the next 4 to 5 years? I believe this question, if you ask on someone who uses it day in and day out, they will say yes, isn't it, Rajesh?
Of course, yes, because I have been using Gillette products from since my college days, I would say. Yes, it's a hold for 4 or 5 years. If you are looking to hold for that long period, the company is very good, brands are very good. I remember Warren Buffett once saying that as long as women shave, Gillette is going to perform. So this is what I would like to say about Gillette. It's a hold from a side, and for any reason it goes around 5,400, 500, then at that point it can be a good buy too.
Okay, that's the take coming in on Gillette. But moving on then, and Kunal, what's your query on Patel Engineering? Ranjit Singh, who's a senior citizen from Hyderabad, holding 2,500 shares from a price of 54 rupees. He wants an advice for the next 6 months. What sort of a target he should be looking at?
See, I think first of all, I would advise that don't look at Patel Engineering as a 6-month play, because the stock has this odd tendency of going into couple of months or couple of quarters of very strong uptrend and then remaining flat for another couple of quarters. So I think in that aspect, because the last 2 quarters were exceptional for the stock, from 15 rupees the stock moved up to I think as much as 60, 62 plus levels, which means a 4x move in the last 2 quarters. Now we can't expect a similar kind of a performance in the next 2 quarters. So if that's the kind of a time frame, then I would believe that maybe if it comes closer to your cost price, that could be a good time where you can look to exit. But if you can extend the time horizon to at least 1.5 to 2 years, 18 months plus, then I believe that the real potential of the last 2 quarters of up move could get visible on the stock price. So it all matters on your time frame. If you can extend it to 1.5 to 2 years, then I would suggest to hold on.
All right, this next query that I have is coming in from Sudeep Chaudhary, and he's writing to us from West Bengal, and he has a couple of stocks that he's asked a query on, but instead I will at least take 2 of those because they are from the similar sector, and that is capital goods. L&T, it's not capital goods, then it's L&T Finance and BHEL is the stock. Rajesh, he has L&T Finance at a price of around 89 rupees per share, about 500 shares he has, and BHEL at 129.5, about 500 shares. What's the future of both of these counters is what he's asking. What's your take coming in on L&T Finance and BHEL? And if you look at BHEL, the buy price is pretty much elevated, isn't it?
Both are a hold from our side. L&T Finance, after a long time, both of the stock, I would say, have started performing after a very long period of time. It's tested a lot of investors' patience, and now they have started moving up. L&T Finance, the business model is good. They have sold off some of their non-performing business, and now the numbers have been pretty good in the last 2-3 quarters. I think it's a hold from our side. As far as BHEL is concerned, they are getting good orders, and when there is a traction in power sector, I think the orders are going to be there for some more period of time. It's one of the best company in the capital goods engineering space. So it's a hold from our side. Maybe a target of 150, 155 in the next 2 quarters is quite possible.
Okay, moving on to the next query then, and the next query is from Jay Krishnan from Kerala. And Kunal, what's your view coming in on HEG? Can Jay Krishnan enter HEG for a medium term at current market price?
If you're a high risk investor and you are okay to or willing to take a high risk bet, then it makes sense to buy HEG at current levels. But I would also advise that you can probably keep one more or go for a staggered buying. Say you can buy 50% of your expected quantity at current levels and keep the balance at closer to 1700 mark. My sense is that the stock could retest at 1700 levels, which was the last 3 months of supports for HEG. So I think that could be a better level to try and average out further.
All right, this next one that I have is coming in from Sharath, and Sharath wants to know about JSW Infra. He's requested us to have a discussion on this. Rajesh, he wants to know whether it's a good stock to actually buy right now in order to make good returns in the next 3 to 4 years or so.
It has given phenomenal return since its listing, I would say. And even at these prices, I think it's a good buy. And if somebody is already holding, one can hold. The port business is doing very well. The valuations are good. I think it can go to 200, 225 rupees in the next 6 months or so for, but a longer term horizon, I think more better targets can be there. So it's a buy and a hold for existing users, existing holders.
Okay, Kunal, what's your take on Jai Balaji Industry? I'm not sure whether you track this one or not, but the company is into steel industry and just yesterday declared its earnings, which was a stellar set, and the stock yesterday as well as today is locked at an upper circuit of 5%. Given a chance, should RAM enter in this particular counter? Any target or stop loss that you can suggest him?
I would not advise so, and in fact, I don't track the stock frankly, and also I think the other catch is that the stock is a T2T group stock, so it's in the ASM list, and I would not look to recommend any view in this kind of names.
All right, Rajesh, this one is for you. We have Mr. Krishna Reddy writing to us, and he wants to know about Finolex cables. He's seeing a 11% loss, and the other one is Expelio Solutions. I'm unsure if you tracked the second one, but what's your take coming in on Finolex cables? And in case you track Expelio, then what's your take on that one also?
Finolex is a good buy, I would say. For some reason, it's showing some amount of correction. If it comes to 900 odd levels, it should be a buy. The numbers have been good. The kind of movement we are witnessing in reality as a whole and the kind of demand going on, I think these kind of companies are going to do well. So one should be patient and continue to hold. And what was the other one you said?
The one is Expelio Solutions. I don't know whether you tracked this one, EXPLEO.
No, I'm really sorry.
All right, no problem. We'll give a skip to that one then. Then you've given your take coming in on Finolex cables. But on that note, we'll slip into a break in this edition of Buy Now, Sell Now, viewers. When we come back, we will continue taking your queries, so don't go anywhere.
Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries, and continuing the same with our experts today, that is Kunal Bothra as well as Rajesh Maheshwari. And moving on to the next one, Rajesh, this query is on Kabir Bedi. He's writing to us after a long time now, and Rajesh, Kabir is holding 2,500 shares of Jyoti Labs from a price of 204 rupees, sitting at good gains in this particular counter. Whether to book profits at this point in time or continue to hold on?
Continue to hold. Maybe a target of 440, 450 is quite possible. Strong brands, Exo, Ujala is the market leader in its own category. So I think it's a very good hold at this point of time. By any chance it falls to 350, 340 odd level, somebody looking can even buy. It's a very good FMCG company. It's giving strong numbers. Some of the products are market leaders in their category. It's a hold from our side.
Rajesh must be wondering, wow, who's Rajesh Maheshwari? I will also clarify that Rajesh Maheshwari is one of our viewer who writes to us day in and day out on stock-related queries. So that's the reason why Shrishti's got confused between Rajesh Agarwal and Rajesh Maheshwari. But let me take the next query coming in. And this one is coming from Krish. He's writing to us from Hyderabad and he wants your view on Yes Bank, Kunal, for a short-term or a medium-term horizon. Do you think Yes Bank even makes the cut?
Not really. I would not suggest a buy on Yes Bank even at current levels. It may look attractive in terms of the price denomination for the stock price, but there are far more better banking names, which I think looks much better at current levels. So I would not advise a buy.
Okay, moving on to the next query then, and the next query, that's for you, Kunal. That's from K. Venkatesh Reddy. He's holding 75 shares of Gland Pharma, but from a price of 2,382 rupees. What to do in this particular name? Continue to hold on?
See, as I mentioned, I think yesterday also that the stock looks to be slight sluggish on the short-term charts. It's retracing from 1,800 or 1,750 odd levels to now 1,560, 70 mark where the stock is trading right now. There could be a possibility that the stock may drift back towards that 1,500 mark over the very near term. So I would suggest that if you're already holding on, you can continue to hold on, but maybe that 1,500 level is something to watch out for. If it sustains about those levels, then I believe that there could be a new rally building up for the stock price.
All right, this one is coming from Chandra, writing to us from Mysore. This one is for you, Rajesh. Chandra is holding about Kirloskar Brothers, about 1,000 shares at a price of 435 rupees per share. He's definitely mentioned the fact that purchased the stock 6 months ago, but wants to know what should he do? What sort of strategy should he adopt for a longer term with Kirloskar Brothers? Makes sense to stay put, look to actually book out some partial profits, or what sort of strategy should he adopt for the longer term?
Now the company is very good. Numbers have been paid. So valuations are also good, but I would say book partial profit. At least take out the kind of capital which you have invested. So the remaining becomes free, and then you can write the stock.
Now the next query is from Balin. He's holding two counters. Firstly is Industar at and now at a profit of 5%, and he also has Tata Chemicals with a profit of 10% currently. What to do in these names? Continue to hold on, or rather make a shift to some of the large cap IT or banking names?
So I would suggest to, as of now, stick to both of these names, Industar as well as Tata Chemicals. Tata Chemicals specifically because I think that's a chart which has hugely underperformed. I think if I'm not wrong, for the last 12 months, the stock has been just stuck at this 1000 levels, plus minus some 40-50 rupees for itself. But I believe that's it's a stock which has a quality of getting into a huge breakout zone in a time and again. So if potentially we expect a breakout for many of these chemical names, then I believe Tata Chemicals could lead from the front, and I think in that aspect you can continue to hold on.
All right, this next one is coming in from Dr. Vadiwala, and this one is for you, Kunal. He wants to know if your view on Avenue Supermart has changed, especially after the stock actually reaction to its earnings yesterday. But when you see on the charts, anything has changed drastically for Avenue Supermart? Are you still betting on this one?
Not really. Nothing has changed for Avenue Supermarts, at least in terms of my view. It still remains on the extremely bullish side. My expectation is, as I highlighted earlier as well, that it's not a 1 to 2 days kind of a breakout for Avenue Supermart, but it's a more of a medium term kind of a breakout, because the stock is coming out of a huge time-wise as well as a price-wise correction. So from 5,500, 600 levels, in a couple of years back, the stock formed a bottom at 3,200, 300 mark, spending a lot of time at the 3,200, 33 levels, and now it's trying to get into recovery. Stock breaking past above its 200-day moving average. All of that augurs extremely well from a medium to long-term play for the stock price. So would continue to bet on Avenue Supermarts.
Okay, Rajesh, the next query that's coming is not a stock-specific query, but a portfolio-related one. And Rakesh from Delhi says that he's holding 60 shares in his portfolio, and he finds it tough to track all of these counters. So wants to know, ideally, how many stocks should one have in a portfolio? How to choose between the gainers and the losers, winners and the losers rather. So any take on this one?
See, there is no hard and fast rule for the number of stock one can hold in one's portfolio. But as far as I am concerned, I have always advised my clients and my friends to keep the number of stocks in between 10 to 15 or in the max 20, not more than that at any cost. Because it's really tough to manage so many stocks, keep track of the price movements, of any fundamental changes and something and stuff. As far as the gentleman is concerned, I would say first try to get out of those stocks which are very small portion of your portfolio, irrespective of the fact of the fundamentals. Because if it is only 0.5%, 1% of your portfolio size, it doesn't require that kind of concentration you have. After that, you look at fundamentals. So don't look at the price. If the fundamentals are good, for example, just sometimes when we were talking about HDFC Bank, if it's there, it's not performing, but still you continue to hold that. And if it's the fundamentals are wrong or bad, you are getting an opportunity to get out of these kind of stock at 20,000 odd Nifty. So that's a time to get out of all your junk stocks.
This one's come from Ranjit, who's writing to us from Gurgaon, and he wants to know about Hindware Home Innovation. I don't know if you track this one. He has 590 shares that he's purchased at the price of around 430 rupees per share. He wants to know whether he should look to book profits or hold for another year.
I would suggest to book profits in the stock. It's showing signs of a mild breakdown as of now. The pattern of consistently making a higher or rather lower high and lower low for the stock price, now trading below the 50 and the 100-day moving average. I think if I'm not wrong, it's also on the verge of breaking below the 200 DMA. I think all of those patterns indicate that it's a good time to book out.
Okay, Rajesh, the next query is coming from Sridhar, and he's holding shares of Balrampur Chini, 50 shares from a price of 424 rupees. Wants to know at what levels can he look to exit this particular name?
See, it's one of the best stock in sugar space, I would say. Market leader. Around 10 sugar factories, they have plain ethanol, cogen facilities, everything going in their favor. The only thing is election time. The election is very near to maybe in the next 5-6 months there are elections. So in this scenario, I don't find sugar stocks performing. But for a longer term horizon, it's a very good stock. One can continue to hold. Maybe a target of 500, 520 is quite possible.
All right. This next query that I have is coming in from. This one is coming in from Amit Sood, and he has 306 shares of Crompton Greaves Consumer as well as CG Power. He's holding both of these counters for over 15 to 20 years now. Rajesh, he wants to know the prospect for both of these and should he hold or book profits. And it is commendable that the fact that the viewer has stayed put with these both of these counters for such a long time. We knew that there was some news-based trouble as well that the stock had actually witnessed a few years ago. But what's your take coming in on both of these counters? What should he do now, Rajesh? Stay put with them. They are solid businesses going ahead. There will be healthy profits in store.
See, you said it right. It's commendable that the investor is holding for such a long period of time. We find very few investors at current scenario for long-term horizon. People talk about 915 to 330, and that's a long-term horizon for some of them. Coming back to CG Power, I think it's a very good stock. One can continue to hold. If the funds allow, one can even add to that on depths, I would say, maybe around 350 odd levels. The product profile is very good. It's doing very well. The demand is there. As far as Crompton is concerned, I think you can hold on to this stock at this point of time, but any move, a 10% or 15% move from the current market price, that's around 350, one can get out of this.
Again, coming to you quickly, because this query is on Jio Financial Services. Post the earnings, the brokerages are just highlighting that they're still waiting for any substantial business under this particular company. But given the plans of this company to expand in various domains, Manjunath wants to know, is this a good time to buy Jio Financial Services?
For me?
Yeah, Rajesh, for you.
Okay. Last time also when Jio was listed, I was on your show and I have said that somebody looking for a time horizon of 4 to 5 years, it's a must buy in your portfolio. Somebody looking for a time horizon of 1 quarter or 2 quarter, I don't think something substantial is going to happen. But if you're looking for 5 years down the line, I think it's one of the must stock to be in your portfolio. They have come out with some plans yesterday with the results, but I think for a longer term horizon, this company is going to do very well.
All right. This next one that I have is coming in from Mr. Kameshwari from Hyderabad. Kunal wants to know about MapmyIndia or CE Info. 50 shares purchased at 2,200 rupees per share. Now he wants to know whether he should go ahead and book loss on this particular counter or what sort of strategy should he have on this one. And also he wants to know if he should add some more at current levels. What's your take coming in on MapmyIndia?
See, I'll not suggest a buy at current levels. In fact, if you've already bought, then I think it could be a good time where you may look to reconsider in terms of your discipline on your stop loss. I would expect the level of, I think, 1900 to be a good support for MapmyIndia. If that gets taken out, then I think it could be a good time where you may look to exit the stock, because the recent volumes and the stock price up move doesn't really match in terms of the technical structure. Ideally, when we look out for exceptionally strong volumes, we expect the stock to get into a huge breakout mode. But then if the stock retraces immediately and the volumes tend to be a slight on the higher side, even the retracements, that's the indication that maybe the structure is not as per the expectation. So I think in that regards, you need to have a trailing stop loss. Keep 1900 as a trailing stop loss for MapmyIndia.
Okay, Rajesh, the next query is coming from Rajiv. He's a senior citizen and wants an advice on 2 counters, Industar as well as REC. Can he hold these particular names for the next 1 year? What's the outlook going ahead?
See, Industar one can continue to hold, although it's a very inconsistent kind of company which gives out inconsistent number. The price movement is also inconsistent, but the valuations are very good. Maybe 240, 250 in the next 1 year is quite possible. And the next one you said was REC, right?
Yeah.
So I think one can book out some amount of profit in REC. It's given a phenomenal run, but the valuation at this point of time looks somewhat stretched because historically, if you look, the REC, PFC, these kind of counters were trading at a P of 2-3 times. Now they are trading at a 5-6 times. Although the dividend yield is still good, but I think some amount of profit booking is warranted.
All right, on that note, we'll slip into a break in this edition of Buy Now Sell Now. When we come back, we will continue taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of his stock related queries then, and this one is coming in from Sitaram Ganesh Kunal. This one is for you. He wants to know if he can enter Marksans Pharma for a period of 1 year, and if can he look to buy the stock today itself?
So I think the stock is at 110.11 mark. Good chart. It's a decent chart. The recent low for the stock was around 100. The high was 122. It's at the midpoint of this recent range. I think it's a good buy at current levels. You can consider doing that. If you're looking at it from a near-term play, then look out for targets in the range of 122 to 125.
Okay, the next query, Rajesh, is coming from Sunil G from Muscat, and he has bought 100 shares of BASF 6 months back, but the stock is at somewhat the similar levels. He wants to know the medium to long-term outlook on this particular name. Any price where he can look to exit this particular counter?
See, this is fundamentally a strong stock for a long-term portfolio, but it doesn't give any kind of movement in the stock price as such in a short-term period. So if you're looking for some short-term swings, I think this is the wrong stock. But if you're looking for a long-term investment, one can have a target of 3,200. But any short-term movement expected in this stock, I don't think that would happen. So you have to keep your time horizon a little longer to be in this stock.
Now, George from Chennai has written to us, and he wants to know whether it's advisable to buy PC Jewelers at current price. Do you think that it makes sense to invest in this one, or there are better names, isn't it, in the jewelry segment?
Yeah, there are better names, and I think if I'm not wrong, Kalyan Jewelers is something which has been a lot more consistent rather. The stock even in the last 2 months, I think, has risen from 200 to 288, and the last 6 months, the stock has moved from I think somewhere closer to 120 mark to current levels. So with a lot more higher degree of consistency. There are odd phases where the stock gets into a 10-15% correction, but that's actually a good time to accumulate. So I would probably prefer this one.
Okay, Rajesh, the next query is coming from Anant Nayak. He's holding 100 shares of Arvind Limited at an average price of 116 rupees, sitting at good gains in this particular counter, but he's looking to add more. Is this a good time to add more of this counter, and what's the outlook?
We have a very positive stance on this. The company is very good, doing very well. And I think the long-term prospects are very high. Maybe in the next 2-3 years down the line, we can see 40-50% appreciation from the current market price. So I would say any dip should be taken as an opportunity to add, have a long-term horizon, continue to work.
Kunal, this is from CG. He's writing to us from Karnataka. Wants to know if it's a hold for Maharashtra Seamless as well as Aptech. I'm not sure that he's purchased, but the fact that he's asking whether it makes sense to stay put with the counters, I'm guessing he's already invested. The buy price is not known.
Yeah, and my assumption is, looking at the charts for Maharashtra Seamless as well as Aptech, that both these stocks have been doing exceptionally well for you. I would suggest to hold on to both of these names. I think these stocks are coming back into a strong breakout mode. Now, maybe the next couple of days or for the next couple of weeks, the stocks may consolidate, but I believe that the trajectory for these stocks should be on the upside. You can continue to hold on.
Okay, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first query for you, Kunal. Gayatri is writing to us for the first time and wants to know, is this a good time to enter ITC?
Well, yeah, I think it's a good time to enter the stock at current levels of 454.
All right, so I have a viewer from Bahrain, Ramamurthy. He's expecting really good bonus, it seems, at the end of this month. Rajesh, he wants good stocks to invest in for the longer time, especially from the PSU banking space.
From the PSU banking space, I would suggest Bank of Maharashtra and SBI.
Okay, Kunal, another query specifically for you from Sri Krishna, holding 50 shares of SRF from a price of 2,300 rupees, wants a short to medium term outlook on this.
Hold is what I would recommend.
All right, this one is coming from Ashish Sharma from Jabalpur. Kunal, Bank of Baroda, he's purchased at price of price of 190, 2,400 shares. What should he do?
Hold on.
Rajesh Seema is holding shares of KPIT Tech. 1,000 shares from a price of 1,000 rupees can hold for the next 6 months. Any outlook on this?
1400. Keep a target of 1400 and continue to hold.
Kunal Prasad has Federal Mogul as well as Zydus Life. Both of them 5% loss. Should he continue to stay put?
Zydus Life, yes. Federal Mogul, you can exit.
Okay, the next query is from Pankaj from Pune, and Rajesh, he's holding PFC from a price of 118 rupees and wants to hold this for the next 5 years. Any target on this one?
See, as I said for IRB, book partial profit, wait for debts to re-enter.
Okay, S. Balaji has Cipla Kunal at the price of around 1,180 rupees per share. Should he hold or sell in the short term? What sort of a target can you look at?
Hold, look out for targets 1230 if you're looking at it from a very short term play.
Okay, the next query is on Rajesh. This one is for you. Holding Shankara Building. The query is from Ramesh. He's holding 500 shares of Shankara Building from a price of 780 rupees. Any view on this one?
Try exiting around 825. That would be a better bet. Move to some other realty stocks.
All right, and with that we come to the end of the rapid fire as well as the queries. Thank you so much Kunal as well as Rajesh for joining us on the show, talking about HDFC Bank as well as taking all of our viewer queries. And viewers, with that we come to the end of this edition of Buy Now Sell Now. We will be back tomorrow, so it's goodbye from Shishti, myself and the team that put the show together. Stay tuned. Markets at noon coming up next.